In this video, let's deep dive into Microsoft to see if it can be an interesting opportunity to buy during this market downturn. The market cap is currently around $2.7 billion. The year-to-date performance is minus 12%. So could it represent a good opportunity? Is it better to buy Microsoft, Amazon, Google? We'll see all of this in this video. Compared to the S&P 500 for the last 5 years, Microsoft have been outperforming 115% compared to 97%. I'm a bit surprised. I thought Microsoft outperformed a bit more, but apparently not that much. It's still a good outperformance, but I would expect maybe a bit more. I think the reason for this is that you always pay, I'm not saying a big, but a certain premium on this company. So that's maybe the reason why the outperformance is not that significant for a company growing like this. So in this video, we're going to cover the business, the numbers, the moat, the value, and of course some potential problems that I may see in this video, in this investment. The history of Microsoft starts in April 4th, 1975, when it was founded by Bill Gates and Paul Allen in Albuquerque, New Mexico. In August 1995, they launched Windows 95, with its integrated MS-DOS start menu and user-friendly interface cemented Microsoft's dominance in the operating system market for years. This success significantly boosted the revenues and profits, driving substantial stock growing through the late 90s. In 2014, Satya Nadella was appointed CEO, succeeding to Steve Ballmer. Nadella initiated a major strategic shift. He refocused Microsoft on cloud computing, cloud first, mobile first, with Azure, embraced open source and moved toward a service model. This pivot revitalized the company, leading to massive growth in cloud revenue and significant resurgence in the stock price, making it highly relevant for understanding Microsoft's current success. October 2023, they did the acquisition of Activision Blizzard. This is a $68 billion acquisition, one of the largest in tech history, significantly expanded Microsoft's footprint in the gaming industry, where you have Xbox Game Studio, Call of Duty, World of Warcraft, Candy Crush. For investors, this represents a major strategic bet on the future of entertainment, subscription service for the Game Pass, and potentially the metaverse, impacting future growth prospects. There is a lot of doubts, to be honest, with this acquisition. Is it really worth 68 billion? Was it a good acquisition? Yes or no? There is a big interrogation mark here. So how Microsoft earn money? Microsoft develops and licenses consumer and enterprise software. It is known for its Windows operating system and Office productivity suite. The company is organized into 3 equally sized broad segments: productivity and business process, legacy Microsoft Office, cloud-based Office 365, Exchange, SharePoint, Skype, LinkedIn, Dynamics, Intelligence Cloud, infrastructure and platform as a service, offering Azure, Windows Server OS, SQL Server, and more personal computing, Windows Client, Xbox, Bing Search, display advertising, and Surface laptop, tablet, and desktop. There is the 3 main revenue area. You have Intelligent Cloud, which is 43% of the revenue, productivity and business process 31%, and more personal computing 25.3%. The Intelligent Cloud, it's server products and cloud services. You have Azure, a comprehensive set of cloud services, computing, networking, storage, AI, IoT, etc. Revenue is mainly driven by consumption-based infrastructure as a service and platform as a service, and per user-based services like enterprise mobility plus security. Azure AI offerings are noted as a competitive advantage. You have also the server products, including SQL Server, Windows Server, Visual Studio, System Center, and related client access licenses. Revenue comes mainly from volume licensing program, OEM license, and retail package product. CIL provides access rights, and their revenue is reported with the associated server product. You also have Nuance and GitHub, include cloud on-premise offerings. Nuance provide healthcare and enterprise AI solution. GitHub provide a collaboration platform and code hosting service. Enterprise and partner services include enterprise support service, industry solution, nuance professional service, Microsoft partner network, and learning experience. This assists customers in developing, deploying, and managing Microsoft and nuance solutions and provide training certification. The cumulative annual growth rate since 2014 for this part, the intelligent cloud, was 17% per year, which is growing extremely fast. The productivity and business process, okay, here you have Office Commercial. Its revenue come from subscription, Office 365, Microsoft 365 Commercial, including offerings like Office, Exchange, SharePoint, Microsoft Teams, Microsoft Viva, Copilot for Microsoft 365. It also includes revenue from Office license on premises. Office customer revenue comes from Microsoft 365 consumer and Copilot Pro subscriptions, Office license on premise, and other Office service like Skype, Outlook.com, and OneDrive. By the way, Skype, I think it will be disabled in May or June 2025, but it's including all of this. Okay, this is driven by subscription, advertising, and sale of minutes. You have LinkedIn as well. Revenue is generated through monetization solution, including talent solution, okay, workforce planning, hiring, learning, and marketing solution like advertising, premium subscription for professional, and sales solution, digital selling tools. You have also Dynamic Business Solution. Revenue comes from Dynamics 365. It's a cloud-based application for ERP, CRM, Power Apps, Power Automate, and on-premise ERP and CRM application. The cumulative annual growth rate for this segment is 11.2% since 2014. So growing kind of good. And the more personal computing, it's Windows, okay, revenue from Windows OEM licensing pre-installed on new devices by manufacturers like Dell, HP, Lenovo. Windows Commercial, okay, volume licensing, Windows Cloud Service like Microsoft Defender for endpoint, patent licensing, and Windows IoT. You have devices. Revenue comes from sales of Surface, HoloLens, and PC accessories. The gaming part, including Xbox hardware sales and Xbox content and services. Xbox content and services revenue come from first party, including Activision Blizzard, and third party games and in-game content, Xbox Game Pass and other subscriptions, Xbox Cloud Gaming, advertising, and third party disc royalties. Search and news advertising revenue come from Bing, including Copilot, Microsoft News, Microsoft Edge, and third party affiliates. The cumulative annual growth rate for this segment is 4.9% since 2014, making it the least growing segment for Microsoft. You can see here the different margins per segment. The personal computer is the lowest operating margin with 31%. It's still doubled since 2016, so it's very good. You have the best one, which is the product business, okay, which is 52% margin, and intelligent cloud, which is 47% margin and growing from 37% in 2016. Who are the clients for Microsoft? You have some individual consumers, okay, with productivity segment like Office consumer, including Microsoft 365 consumer subscription, Copilot Pro, Office license on-premise. You have Windows, okay, the operating system which is pre-installed on computer and so on. Devices such as Surface, PC and tablet, PC accessories. Gaming, okay, Xbox console, Xbox content, Xbox Game Pass, and so on. You have also the search, like Bing Research, Microsoft Edge browsers, Microsoft News, and so on. You have also small and medium organizations that will also use the productivity suite, like Office, Commercial, 365, etc. Business solution like Dynamics 365, which is a cloud-based ERP, CRM, Power Apps, Power Automate. You have cloud and server from Azure Cloud Services, Windows as well, and Windows Commercial here, LinkedIn, and licensing, okay, option like Open Value Agreement are designed for SMBs. Also, you will have large global enterprise and public sector institutions. They will use again productivity, cloud and server, business solutions, Windows services, and LinkedIn. You have also some application developers that will use cloud and tools. They will use Azure, GitHub, Visual Studio, Copilot, and so on, or Windows Dev Home in Windows. Original equipment manufacturer, OEM, okay, which will have Windows license for pre-installation in new PCs and devices, and also Office, potential for Office application pre-installation. The sales by country is 50% in USA and 50% others. They don't specify which country. It's like a global for this. When it comes to the market, if you look at the cloud infrastructure, which is, let's say, the main market, the main growth driver for the future of Microsoft right now, you can see that they have a good position. You have Amazon, which is 32% with AWS, Microsoft with Azure 23%, and Google 10%. Even though it seems that Google is growing a bit faster than Azure in this, they have a very solid cloud. Apparently, Microsoft Cloud is kind of better than Google one. I mean, it's not better, it's just the use for it is more developed and is more interesting than the Google one, even though the Google one is really growing fast. And you have as well AWS, which is on top and a bit far away on every point. AWS is probably the best one, the best solution here, but the one from Microsoft is not that far away from AWS. For the market as well, the overall market CAGR, cumulative annual growth rate, will be around 15% till 2030. So you have a good wave of growth here, so it's very good. The competition for Productivity and CRM, you have Salesforce, Alphabet, Zoom, Cisco Systems, SAP, ServiceNow. For the intelligent cloud, you will have Amazon, Alphabet, IBM, Oracle, and personal computing, Apple, Alphabet, Tencent, Nintendo, and Sony. Here, like, they have a lot of competition in each field, but they are well positioned all the time. Like, there is not a field, let's say, where they are very far away from everybody. They have a good and dominant position a bit everywhere. In the team, you have Satya Nadella, which is CEO since 2014, and since he's CEO in 2014, the company has been performing very well. He implemented a very good vision. And you have Amy Hood, which is CFO since 2013, and she's been in Microsoft for more than 22 years. So they know the company. The owner, nothing interesting here, is mostly institutional, so no big thing. When it comes to numbers, the growth score is 98%, which is really good, with a future growth for the revenue and EPS around 14%, which is great. The revenue have grown by 11% for the last 10 years and 14% for the last 5 years. When it comes to EPS, 25% cumulative annual growth rate for the last 10 years and 18% the last 5 years, and free cash flow, 12% and 10%. So very, very solid growth and a big historic of growth, and it's very predictable growth. It's like always around between 12 and 14, 15%, so it's pretty solid. When it comes to efficiency, we have operating margins that were 30% 10 years ago. Now it's 45%. They're improving the margin, they're improving the profitability. This is great. Return on invested capital, same. 20% 10 years ago, now 22%. It was 26% 5 years ago, but it's pretty high. When it's higher than 15, 20, I really like it. So here it's pretty good. And return on assets, they are getting higher and higher year after year, 7% 10 years ago, 18% now. So we have an overall score of 86%. For debt, they have very low debt. Okay, debt to EBITDA is 0.2. Before it was in minus, so very low debt. Debt to equity before was 70%. Now it's 30%. That's why we don't have 100% here, because it was 70% 5 years ago. And interest coverage is way above what we are looking for. We're looking between 8 and 10. So here it's 43. So apparently the company should not go bankrupt, and I think they have a AAA grade from S&P Global, so no risk of bankruptcy. The allocation of here is probably the main problem with Microsoft. They don't do really buybacks, okay, minus 0.4% in 5 years. So they didn't do because maybe they consider to be overvalued, or it's apparently not at all in the politics. I'm surprised that they didn't do much buybacks in 2022 when the stock were clearly undervalued. But yeah, this is a way improvement. Also, the capex to operating cash flow is super high, okay? You have 44% capex, and 5 years ago was around 25, so it's always been high, and this is problematic. It's way too high. Stock-based compensation, 11% 5 years ago, 16% now. It's again too high. I don't want it to be higher than 10%. Doesn't mean that it's a red flag and you should not invest in Microsoft, but it's somewhere where it's something that I don't really like. They really need to decrease the capex in the years, or to really make their income way higher, the operating cash flow way higher, because you cannot stay at 44% capex to operating cash flow for too long. Dividend, they have a safe dividend, okay, growth rate for 14 years, growing by 10% per year approximately, and a payout ratio around 25%. So the dividend is pretty safe. Not really interesting though, but still here, I would prefer that they do buybacks instead of dividend, to be honest. So we have an overall quality score of 85%, which is excellent. The strength of this business is diverse portfolio, okay? Offer a wide array of products and services, including cloud solution, operating system, productivity application, business solution, hardware, gaming, LinkedIn professional network, and search advertising. They have leadership in cloud computing, okay? The Microsoft Cloud, including Azure, Office 365, commercial including Dynamics, is a major revenue driver, showing a significant growth and benefiting from economy of scale and its extensive data center infrastructure. Azure offers hybrid consistency and a wide range of services, including AI. Enterprise integration and ecosystem. Okay, Microsoft products create a cohesive ecosystem that deeply embed in enterprise operation worldwide, making it difficult for business to switch away from their solutions. AI integration and investment, okay, they had strategically invested in OpenAI and is rapidly integrating AI capabilities across its product line, positioning the company at the forefront of the AI revolution in business application. And of course, you have a strong financial position. They managed to increase their operating margin, to increase their revenue and the EPS very regularly over the long run. So this is great. The weakness from this company, the first one is the search market position. Okay, despite significant investment in big and integration with AI capabilities, Microsoft remained far behind Google. Like 95% of the web research are meant from Google. So here they really, I'm not saying did bad, but it shows that it's not that easy to be Google. The product, okay, here it's more something where I am a bit subjective here. Maybe I'm wrong, or maybe it's just because my habits or whatever. But Microsoft Office, Microsoft Teams, and other CRMs that they have, like I really find them bad compared to peers. Like I really find them like non-user friendly, like lagging, slow, not really nice. Like every time I'm using, for example, Microsoft Teams is such a shit thing, like compared to Zoom, even compared to Google Meet. Google Meet is not that exceptional, but at least it does the job. With Microsoft Teams, like I always find it so difficult to do. Every time you need to log in, log out, like it's a problem. Like, yeah, it's really not user-friendly compared to peers. But then maybe it's just me, maybe for the other thing, but I feel that here, like a lot of companies use a Microsoft product because they started using this, everybody got trained with this, but nowadays I think they should do an update on all of this because I find them a bit beyond competitors. But maybe I'm wrong, maybe it's just on a little part that they are beyond competitors, maybe for the rest they are better. Hardware and market share challenges, okay. Surfaces device while innovating all the relatively small market share compared to competitor in the personal computing hardware space. Dependence on key supplier manufacturing, reliance on third-party contract manufacturer primarily in Asia, and a limited number of suppliers for certain components create supply chain risk and potential disruption. Challenge integrating acquisitions, okay, integrating large acquisitions like Nuance or Activision Blizzard involves significant challenge, including integrating employees, system, and technology, realizing expected synergy, and managing compliance. Another weakness I would put, it's in the hardware we talk about Surface, but they also have this problem with, they didn't manage to go with in the phone, okay, the Microsoft phone, EOS and so on was such a failure that this could be a weakness as well. When it comes to opportunities, they have AI leadership and integration, capitalizing in the new age of AI by infusing AI capabilities like Copilot across all products and services, leveraging its cloud infrastructure and partnership, for example, OpenAI, to drive productivity gains and new business value. You have the gaming expansion, growing the gaming business through Xbox Game Pass subscription, cloud gaming, expanding first-party content. Okay, this can be an area to grow. I don't see the growth that's enormous here, but it's still somewhere that they can grow. The cybersecurity market growth, I think this can be a great opportunity, leveraging integrated security, compliance, identity, and management solutions to address the increasing priority of cybersecurity for organizations across all platforms and cloud. Edge computing, the growth of IoT and edge computing aligns well with Microsoft's cloud infrastructure, offering new growth avenue beyond traditional cloud services. You have also hybrid work solution, okay, meeting the need of evolving workplace with platforms like Microsoft Teams, Microsoft Viva, and Windows 365, Cloud PC, etc. And growth in specific market, okay, they can grow in other geographic markets, okay, they can manage to go in growing markets and so on. They can grow in the small and medium business area. The threat for this company, you have the intense and evolving competition. Okay, they have a significant competition across all segments they are in. So, and competitors are not like little company. Some competitors like Amazon, Alphabet, Apple, Oracle, they are huge company with huge budget, with billions to spend. So this is a serious competition. Okay, not saying they cannot be well placed in it, but it's like they don't have little competition on their market. Like it's not little players. You have also some cybersecurity risk. Everything is cloud-based, everything is computer and so on. So some hack and data breach can happen. You have also economic and geopolitical uncertainty. We saw this especially now with the trade wars that may be here. You have also legal and regulatory uncertainty. It's not the first time, but a lot of time Microsoft go in the antitrust, okay, competition, antitrust. They have trial with this. They spend a lot of money with this. Now ESG. So it's an area where that can defocus them from growing, or they can put some bad vibes, let's say, around the company. You also have some intellectual property challenges, okay, which related to protecting its own IP globally and facing claim of infringement from third parties, potentially leading to a costly litigation, settlement, or design changes, especially concerning AI training data and outputs. And the talent competition, with all the growth that they want to have and all the investment, you have a limited number of people able to do this, able to work in all of this, able to be good in this. So who will have them? Will it be Alphabet, Apple, Microsoft, Amazon? Okay, they will all fight to have the best talent possible. The product. Now let's answer a few questions about all of this. Are they essential? Yes, a lot of Microsoft products and service are, but you have some that are less. Are the sales predictable? Is there any regularity? Yes, a lot of subscription plus a track record. Is it a wide market with ton of clients? Yes, plus very diversified. Is it difficult for clients to change to competitors? Yes, for most of Microsoft services. Are the product resilient to change and innovations? No, but Microsoft is able to be well positioned all the time. They show that they're able to position themselves, but fortunately you can have a big disruption. The position. Are they market leader? Yes, in some segment, but it's a yes and no, because they're leader in some segment, but they have big competition all the time. Is the market open or closed? Depend which part of the market. Competitors cannot enter easily in most markets where Microsoft operates. As a price maker, yes and no, it depends on which market, and it's not really their strength. Is it easy to forecast the growth? Kinda, yeah. Are they dependent on geopolitics? Not more than other companies here. And is it easy to find new clients? No, some of Microsoft solutions are obvious to take, so it's kind of easy for them to find new clients. Everybody knows Microsoft, like they're so big. The only problem is in some segments, the small company could start with another CRM and so on, so they will not change after for Microsoft, especially that generally Microsoft seems to be a bit less good. The management, does the growth come from outside or inside? So both, but mostly from inside. Of course, they do some acquisition, but the growth mostly come from inside. Is it easy to manage a company? No, a lot of capex needed and innovation, so not really easy. Is a company focusing on creating good products? It seems yes, okay, if you listen to them, yes, but to be fair, when I see Microsoft Teams, I really have doubt. Like when I see Microsoft, even how is it with Word, PowerPoint and so on, like I have doubt that they try to, yes, they are a good product, but I just have doubt, like I feel that the competition can have a better and more user-friendly product. It's not like the product are good, I'm just wondering, like I don't find them really user-friendly, okay? Are the important team members good? Yeah, okay. Now let's talk about the moat. Morningstar had a wide moat with stable trend. Great for Microsoft, which is good. The efficiency, you have high and growing operating margins, okay, and high return on invested capital. So it's good. Do they have a switching cost? Yes, definitely, thanks to the wide range of service and the areas. Cloud, OS, CRM, once the company learns to use Microsoft, they cannot change easily. Do they have a pricing power? A bit, but not that much. Do they have intangible assets? Yes, they own a lot of patents, plus LinkedIn can be strong intangible assets as well. Xbox and Xbox Cloud Gaming and so on, some games with this. So yeah, they start to have some good intangible assets. Do they have an efficient scale? Not really, okay, like they're in wide market. Do they have a cost advantage? Yes, especially in cloud, which is an economy of scale. Like the more you have data center and the more you have users, the less it will cost you and so on. So yeah. Do they have network effect? Yes, especially with CRM and LinkedIn. Now let's go to the valuation. So the price is around $370 at the moment I'm doing this video. The median price earning for the last 10 years have been 32. The actual PE ratio is 29, the forward PE is 26. The expected gross revenue and EPS rate will be around 13.5%. So if we do valuation, first let's do it with operating cash flow. As you know, they invest massively to develop. So we can start with operating cash flow for the next 5 years. If you think the operating cash flow will grow by 11% for the next 5 years, and we'll have a price to operating cash flow of 21, which is the median, okay, for the last 10 years. So if we go back to this, so we don't have buybacks. The fair value to do 13% per year will be around $339. If you buy it now at $370, you could expect to do 11% cumulative annual growth rate for the next 5 years, dividend included. Without the dividend, around 10.62%. Now we can do it with net income, okay? With the net income, it will be mostly this is the last net income. I mean, it's the sum of the 3 last quarter plus the expected next quarter. And we will have a price ratio. We saw it's 32. The median PE for the last 10 years is 32. I'm not comfortable having 32. I rather have 25, especially that they have 13% growth. Generally, like, I think 25 is already good. I will even put 23 with the growth, but let's take 25. If they grow by 13% per year, you will have a fair value around $330. Okay, kind of the same that with the operating one. If we take a bit more margin of safety here with the growth rate and put only 11%, the fair value will be around $310. So you will need a 15% decrease approximately to do 13% per year. Here again is if you want to do 13% per year. At this price, you can expect to do around 8.44% per year without a dividend. Okay, so the value is kind of fine here. It depends what you want from the company. It's not that overvalued, but it could be a bit less. So the value score here will be around 60% and the quality score is 85. We kind of have value which is kind of fine, but for me it's still always a bit expensive. I would prefer to have more margins of safety here. To conclude this video, the company has, it's huge and it has a strong moat. So this is very good. Except for CapEx and stock-based compensation, the numbers are amazing. I would like them to lower this compared to operating cash flow and free cash flow, but still they have good numbers. They are well positioned on key future markets, so this is good. And my only concern here is Amazon and Alphabet have a lower valuation today. Could Microsoft outperform them for the next 5 to 10 years, considering the valuation? In my opinion, if Microsoft didn't outperform that much the S&P 500 for the last 5 years, it's because of the valuation. It's because Microsoft always had a kind of high valuation during this time. But when they go down in valuation, like in 2022, they can provide significant outperformance. Here, my concern is you pay a bit higher premium for Microsoft that you pay for Amazon and Alphabet. So Amazon and Alphabet are always well positioned in all of this, so maybe they could outperform. We don't know, okay, I cannot predict the future. But if you think that with this kind of valuation, or if Microsoft can outperform both, okay, the price seems fair around $350. Around $350, $330, the price seems kind of fair if you think that they can outperform with these little premiums that they have compared to Amazon and Alphabet. So that's all for this video. Let me know in the comment section if you have Microsoft in your portfolio, if you're interested into Microsoft, and as well let me know about some companies that you would like to see in deep dive analysis. Bye bye.